Now, I would open the floor for questions, but before you raise your hands, may I remind you that when you have questions, please identify yourself and the organizations that you're with, so we know who you are. Okay, there's a hand over there. Please identify yourself.
Okay, Tracy Lee from Cable TV. We want to know, since the oil price dropped quite a lot recently, does it help to relieve the pressure you have mentioned before? And because if cannot relieve much pressure, can you tell us why? And can you tell us also what's the percentage CLP considered to raise the tariff? Thanks.
Thanks for that question. The challenge we face in terms of our gas prices going forward is that we currently have a 20-year-old gas contract that was negotiated in a completely different era of fossil fuel prices, including oil prices. Now, we're going to have to replace that contract, and we're in the process of replacing it, with natural gas at world prices. And those prices are linked, as you say, to oil. And even at today's oil price, which has come off a little bit, you're correct, we anticipate that the new gas contract will be 3 times the cost of our existing contract. The era of cheap gas in Hong Kong is now over. At the same time, we're going to have to double those volumes in order to meet the 2015 emission caps imposed upon us by law, by government. So we have to increase 6-fold our gas bill, roughly speaking. Now, who knows what the oil price is going to be in the future? But the fundamental problem is we're moving from a very, very low gas price to a market price based off oil. And ideally, we hope oil prices will stay low, will come off even further. But that's going to be only a very marginal impact on the big increase in our fuel bill that we're going to have to incur over the coming years. Now, in terms of the impact on tariffs this year, the end of this year, next year, it's premature to talk about that. Obviously, there are many other factors involved. But what we can say, and what the chairman has said, is that the impact of the new gas contracts that we are entering into will result in material increases in our tariffs in the coming years. And there's nothing anybody can do about that. Now, obviously, we're doing whatever we can in other areas to control our costs, but the fuel bill is going to go up materially as a consequence of the new gas contract that we are entering into. And the impact on tariffs will be material in the coming years.
Thank you. Johnny and then Denise.
Johnny Singh from Singtao. May I know what's the update negotiation between CLP and Southern Electricity Grid concerning the purchase of Castle Pit power network? And secondly, under new CE's administration from July onwards, do you anticipate it will be more easier to negotiate a better fuel charge, or will be more difficult because maybe they have a new set of mind on the supervision of the tariff? Thank you.
Well, thank you for those questions. In relation to the discussions that CLP and China Southern Grid are having with ExxonMobil to acquire their 60% stake in Capco, there's nothing much more I can say than what we've already said. Those are ongoing discussions. Whether a resolution will be there, it's premature to say. So really, I can't comment any more on that. In relation to the new chief executive, again, it's difficult for me to speculate as to what the attitude of the government, the next government will be with regard to electricity tariffs and so on. What we do want to do and what we have been doing is communicating very clearly to the current government, the future government, and to the community at large that electricity tariffs are going to have to rise as a consequence of the increase in natural gas. It's a comment I made in answer to the earlier question. That's regardless of whatever regulatory structure we have in Hong Kong. The era of cheap gas for power generation in Hong Kong is now over.
Denise.
Thank you, Jane. I'm Denise with the South China Post. Well, so Michael, I hope you'll recover by now because I have several questions for you. In a previous speech that you mentioned that you did not vote for CE, but you know that same as us. But what's your bottom line in negotiation with the new government in relation to a potential increase in tariff? Obviously, the company will raise the tariff because of the gas prices. So what's the bottom line on that? And the second question is, why does CAPCO bring in a Chinese state-owned company into CAPCO, but not other shareholders? And the third is, why doesn't CLP buy the remaining stake in CAPCO from ExxonMobil? So here it is. Thank you.
Thank you. Yeah, I'll have to put words in the chairman's mouth if you don't mind, Denise. Otherwise, it'll just be a bit of further croaking, which probably is not. In terms of the, you asked what's the bottom line on the tariff. All I can repeat is my earlier comments that we're going to have a material increase in our gas bill in the coming years that will have to be paid for, and the regulatory structure is such that we CLP do not make any profits at all from the fuel. It's a straight pass-through in the tariff formula. It's, as I said earlier, it's inevitable tariffs will have to rise as a consequence of increased gas prices. The era of cheap gas in Hong Kong for power generation is now over. That's a fact. Your second question about why CLP is working with China Southern Grid in relation to the acquisition or the potential acquisition of the Exxon stake in CAPCO. We have a very long and deep relationship with China Southern Grid, going back since the opening up of the mainland back in the late 1970s. So we have a very close relationship with them. We do a lot of interactions with them, and we think they will be an excellent long-term partner for us in the generation business here in Hong Kong. Your question is, why didn't we do it 100% ourselves? We see the benefit of working with a strong partner in Hong Kong, as we have in the past. ExxonMobil was a very strong partner going back over the last 45 years. We think looking ahead long term, a strong relationship with China Southern Grid in the Hong Kong market will be a benefit to ourselves and to the eventual integration at some stage in the future between the Hong Kong power system and the mainland power system. It's not on the cards right now, but at some stage there will be greater integration, and a strong, close relationship with China Southern Grid will only enhance that potential.
Thank you, Mr. Brandler. There is a hand over there.
Hi, this is Brian from Now TV. Can you give us some updates on the spin-off plan of TRU in Australia? Would listing still be the first priority of the spin-off plan? Thank you.
Yes, well, thanks for that question. We've made no firm decisions as to how to take forward the business in Australia. A potential listing, and it would be a minority stake if we did list it, we wouldn't spin it off entirely. A potential listing in the Australian stock market for our Australian business is something that we do have under consideration. As I said, no firm decision has been made upon that. But if we did proceed, CLP would still maintain a majority stake in that business.
Yes. Any other questions? Over here, this gentleman over here.
Hi, I'm Jeffrey Ng from the Wall Street Journal. Just a follow-up question on the a possible listing of True Energy in Australia. I'd like to understand the rationale. Why now? Why are you considering a possible monetization of your business in Australia? Is it because valuations are ripe, or is it because you're not too confident about the outlook? I'd just like to hear more from you folks. Thank you.
That's a good question. It's a question that we've been quite open about when asked in the past. And again, if you look at our recent statements, we've been very clear as to what our intentions are. And the reason that we're looking as to how to take forward the business is that we have a substantial capital investment already in Australia, close to $5 billion Australian dollars invested in that, of equity invested in that business. And whilst we're very comfortable with the business and we're very pleased with the performance, we do have other demands on our capital at the holding company. We have investments opportunities obviously here in Hong Kong, in the mainland, India, and so on. So we do want to repatriate some of the investment that we made in Australia, repatriate the capital, some of it, back to Hong Kong to allow us to continue to grow elsewhere in the group. And we've been saying that consistently for the last couple of years. So that's one of the major reasons why we're looking to realize some of the value in the business. We also think the business will benefit from a stronger Australian identity. So having Australian shareholders, a bigger Australian presence, we think will be a benefit to the wider business. You know, we have close to 3 million customer accounts in Australia, 3 million households that we deal with, and a stronger Australian identity we think will enhance and strengthen that relationship.
Thank you. Over there, Rahul.
Rahul Jacob from the Financial Times. So, Michael, I'm not sure how you're going to answer this question, but perhaps you could whisper to one of the gentlemen on your left and right. Because the question is quite a personal one. You, in your very elegant introduction, you said that you contrasted the West Kowloon and Kai Tak situation with what might happen if this sort of back and forth on electricity tariffs continue. What you seem to be saying is the city that was known for working extremely well isn't working today. And how do you contrast that with Singapore?
With Singapore?
Hong Kong, yeah. Hong Kong.
I wouldn't contrast it with Singapore. I think we have to contrast it here.
What Sir Michael whispered to me was that the idea of contrasting with Singapore is not, we don't think, is a particularly appropriate way to look at things. I know a lot of people do, Hong Kong versus Singapore. We have to contrast it with how things are in Hong Kong, how they have been in Hong Kong, and how they should be going forward. And let me just give my personal view. Obviously, Sir Michael didn't comment on that, but I do feel that the current administration, and I think the next administration will have a similar challenge, is that Hong Kong, given its constitutional structure right now, it's difficult for any administration to make decisions that may be perceived by a minority of the population to be unpopular or not in their interest. And I do feel personally, absent further progress in constitutional reform in Hong Kong, it'll be very difficult for any administration. Certainly the current administration has struggled. I think the next administration will have challenges as well in pushing forward policies that will disaffect a minority of the population. And absent a mandate, a popular mandate, absent some form of democratic process to elect the legislator and the chief executive, I think any administration will struggle. I'd say that's a personal view.
Thank you. I think we have, perhaps we have enough time to take one more question if there's any. Well, okay, Johnny.
Some wind power company in China is losing money because of the tariff price. Do you anticipate a similar type of difficulty in China? And secondly, you were going to develop your headquarters in Mong Kok. I think you have a temporary office, but will you find a more permanent office in the future? Thank you.
On the wind power question, our wind portfolio in the mainland is doing fine. There's no problems with profitability there. We do have issues upon occasion where the wind power is constrained off the grid because of grid constraints, but we took that into account at the time we made the investments, and that's an issue which I think will be resolved gradually over the next few years. And generally, we're very happy with our wind portfolio in the mainland. Obviously, it depends how strong the wind blows. That's always a variable. That's an act of God, as it were. Nothing we can do to control that. But generally speaking, the performance has been good, and we're happy with it. And we want to continue to grow that business in a modest way in the years ahead. In relation to the redevelopment of our current head office in Mong Kok, we do have planning permission to redevelop part of the site. We do intend, as we've said, to preserve the clock tower building, which is the iconic building, 1/3 of the building. If you look at the original layout of our head office, it was 3 separate buildings. So we will maintain and preserve the head office building, and our intention is to convert it into a non-profit type use, such as a museum or educational center, and we're in discussions with government about that. But then we do plan to redevelop the other 2/3 of the site into a residential building. And as you say, we do plan to move to what is likely to be temporary, but we don't know for how long, to a new temporary head office at the Laguna Verde development in Hokun. Given that it's, we don't have any immediate and clear plans for a permanent head office, the chances are we'll be in that location for a number of years. And it's suitable for our current use. It's frankly much more suitable than our current head office, which was built 70 years ago. It's not really designed as an office. In fact, it was designed as a residential building in the first place. And we have a number of our staff scattered all over Kowloon. And the opportunity to move to one location, bring everybody together, will obviously enhance internal productivity and efficiency within the company.
Okay, thank you, Andrew. All right, I think time's out, and I would draw the meeting to a close. And thank you very much for joining us today. We have our public affairs colleagues around if you need any further information. And also do pick up the copy of Sir Michael's speech when you walk out this room. Thank you. And I hope Sir Michael will recover your voice very quickly so he can talk to you next time at ease.
So too. Thank you.
Thank you.
Thank you very much. Thank you.